So we will wait just a few minutes to get going. Hello to everyone who's currently in the room. I'm Nick, this is Jenny.
Hi, everybody.
So to everyone who's joined so far, thank you for coming out to listen to Jenny and I speak. Really excited for this discussion, and we'll wait just a couple more minutes for some more additional people to join, and we'll kick off our discussion around what Jamestown's doing during these crazy times we're in. All right, Jenny, you want to go ahead and ready to kick things off? So
Sure.
I think the first and most important question is, Jenny, where are you? How are you doing? Tell us about your quarantine. How has your life changed from a work perspective since the onset of COVID?
Yeah, nice to virtually be here with everyone. Hopefully we can do this in person sometime, maybe with a real live happy hour or something afterwards, which is a crazy thought to think about right now. But no, in all seriousness, super, super grateful to be a part of this community. I think it's been super inspiring to see the way that the prop tech community, the venture community, and the real estate community has rallied over the past month to engage in these types of conversations. So thank you to the Shadow Ventures team for having me. I'm currently in New Hampshire. I'm based in New York, but was lucky enough to escape and have the flexibility to get out of Dodge about a month ago and have no end in sight. So I live in the woods now, which is giving me a new perspective on real estate and urban markets for sure. But I am healthy and safe and hope the same of everybody else. So a little background about myself and Jamestown just quickly. Jamestown is a vertically integrated real estate firm. We have over 37 years of operating experience. We are predominantly in gateway cities, as well as some Latin American and European markets. We're most well known for our large scale redevelopment projects, such as Chelsea Market in New York, Industry City out in Brooklyn, Pond City Market in Atlanta, if you live there, the Innovation Design Building in Boston, Ghirardelli Square, Levi's Plaza in San Francisco. And I joined Jamestown about a year ago now to lead technology, strategy, investments, and partnerships, which has even changed dramatically over the course of me being at Jamestown, just given how rapidly the prop tech landscape and the technology landscape has matured in the past year. And then I will say in the past month, my job has changed even more than it had over the past year. So excited to get into some of these conversations today.
Yeah, for sure. Well, I think it's kind of unique. So one of the things I was excited to hear about was actually like some of the changes that have occurred in your role. We touched on this before we actually went live and started broadcasting. But so just to, I guess, back up a step, for those who don't know me, I'm Nick. I'm with Shadow Ventures. I kind of work on the investment and fund side of things here. Jenny and I actually started kind of at this, I think it was maybe the same month. We started at a pretty similar time last year, respectively, with our two firms. So we've kind of stayed in touch, and I think have formed a bond, if you will, on just what's happening in the prop tech market and real estate, construction. We've had a lot of good conversations over the course of the last year, and yeah, frankly, like to our the landscape for us, Shadow Ventures looks very different in terms of what we're going to be looking at for investments. Like we are near the end of a fundraise, and just our day to day, and in terms of how we're operating the firm has significantly shifted, right? So curious. Let's enough about me. Let's talk about what we're all here to hear about, and which is how has your day to day shifted? How has your role shifted as a technology leader? Are you all still making direct investments? How are you looking? How is the lens with which you've looked at investing in technology adoption changed over the last couple months?
Yeah, so I think just for starters, looking at the way that Jamestown has thought about technology investments and kind of strategy historically has sort of fallen into two buckets. There's bucket one, which is the baseline case of how do we equip our buildings to be resilient and intelligent to meet the needs of the modern workforce and modern consumers. And I think that has been a lot of just introducing smart building solutions, building management systems, data analytics to manage our portfolio. And then there's the second bucket, which is how do we use technology, relationships, and investments to advance our understanding for where the world is headed, and then design our properties to kind of be nimble and responsive to that world at a fundamental level. So how do we use space? How do we select markets? How do we think about acquisitions? And over the past month, conversations across both of those verticals have gone from looking out at a 3 to 5 year time horizon and thinking of investments that we might make and conversations that we might need to start having in order to kind of prepare for a changing world, to how do we accelerate our relationship with technology today so that we're ready a month from now to meet the dramatic changes that have happened in the world. So timeline has just been, and like timelines compressing has been
Right.
the biggest change in my day-to-day, and I think the day-to-day of Jamestown. And what that has meant on a practical level has been actually really, really inspiring and really interesting, and I think opens up a lot of unique opportunities for the startup world and real estate world to collaborate. And that it's meant that there's kind of this cross-functional group of folks in the room together, or in the virtual room together, talking about how they can be nimble and introduce solutions and be iterative and kind of adopt these lean methodologies for introducing new solutions in a way that I think a year ago, if you told me that Jamestown or any real estate firm of our size could kind of operate on that level, I would be extremely skeptical. And I think it's introduced a new normal just from a pure operating level and from decision-making level that I think is here to stay. So step one is,
Which is
just
amazing.
Yeah, it's amazing. And I think and I think, my role has become increasingly common across the real estate landscape, is to have someone who's acting as this liaison between the tech world, the venture world, and the real estate world. But it's kind of acted as just that for the past several years, I think, at many firms, where you're like, well, we have our tech person or we have our venture person, and they're our bridge into that world. I think that this has changed the nature of these types of roles to be more embedded into a firm, and to say that we really actually need to have all of our teams understand and engage with technology and with folks that have insights into various trends or into how the world's changing, kind of at a fundamental level, so that we can react more quickly.
Yeah.
It's
interesting hearing, going back to what you were saying initially, you all first try to predict where the market is going, and you base your investment strategy around that. For probably different for a standard VC, but I know a lot of strategic investors who just like their strategy is more of a bottoms up approach of of let me just invest in some of the things that I really like right now. And, you know, some of the founders and the entrepreneurs that are building within my space and like, you know, almost indexing a little bit to the market, you all try to get really predictive actually with where the market's going. Kind
Yeah.
of curious to hear more about your thoughts there.
I mean, part of that was born out of necessity, just the fact we've been in this bull market for so long and the margins for success are increasingly thin. And so the degree to which you can find an edge using relationships with kind of other industries that maybe have insight into major markets that might experience some boom because there's a mass migration of engineering talent there, can provide you with a new investment thesis. And so I think Jamestown has been rewarded historically for taking calculated risks along the lines of introducing food hall environments like Chelsea Market into new parts of kind of urban markets before others maybe saw that trend happening. And I think that we see something like that happening right now, just in terms of kind of the way that technology can change a market that we're investing in or a product type. And so I wouldn't say that we're necessarily more predictive than others. I think everyone's trying to do this. I think that's why you see, again, the kind of these bridges happening between real estate and technology. But I think that this has kind of validated the need to have really strong partners and a really strong ecosystem of people that you trust who have insight into the world is headed as something that can complement your investment and acquisition strategy as well as your, you know, development and design strategy.
Mm-hmm. So where do you all stand currently in terms of how you're thinking about new investments and just, I guess, implementing existing investments in the portfolio? Obviously, a lot of the business that you're in the retail environment has stalled. That I'm sure is shifting things. Like, how are you dealing with technology investment versus core business strategy? And just curious to hear where you're all at on that.
Yeah. So for context, we started making direct investments and LP investments in technology companies and venture firms about 2 years ago. And it really has been very kind of opportunistic and strategic. And so the thought process has always been that we want to make an investment in a business that we think we can add a lot of strategic value to, both in terms of maybe deploying them across our portfolio, as well as providing some insight that can fill a gap in knowledge on the real estate angle, as well as investing in companies that can provide us with differentiation on the portfolio level or access to kind of R&D knowledge. And I would be lying if I said we're just going gangbusters right now, looking in to make a bunch of direct investments. I think that there's absolutely a bit of conservatism that I think you're seeing is widespread in the venture community right now, just as valuations and the market is fairly uncertain right now. But the way that we're thinking about our tech investments right now and the way that we're kind of cashing in on existing investments we've made is really approaching it more from that latter side, which is the R&D side, and saying, again, we need to figure out what our strategy for a post-COVID world or a COVID world looks like over the next month, 3 months, 6 months, 9 months. How can we lean on technology partners and investments in order to provide us with insight that we just don't have as a firm, or provide us with these lean and scrappy capabilities that we don't necessarily have as a real estate firm? And so we've been working a lot with like partners like Fifth Wall Ventures, who are LP investors in, ecosystem partners like you, like Shadow, as well as some of our direct tech investments like H2O or Hello Alfred, to understand what we can do at the property level. In terms of new investments, we're still evaluating some opportunities, but the conversation has shifted a lot to be, what will the world look like coming out of this? And is this opportunity highly correlated to the tailwinds that we're seeing in the market right now?
For sure. So this could be a fun little game to try to do, but also very difficult. what are some of your predictions on how you see the post-COVID world kind of shaping out? Like any early indications of what you think? I mean, specifically in the retail environment. How are you thinking about that? Even like a mental model for like, I know, I mean, obviously we can't predict what's going to happen a month from now. But just curious to hear your thoughts.
Yeah, it's funny you say that. One of the things I'm working on right now is trying to take those mental models and apply it to a matrix where we have a bunch of team members kind of trying to apply some of those predictions into action.
Yeah.
And there are many different ways you could slice that. But the way that I've been thinking about it is the world will not be the same, that's for sure. But there are areas where maybe we've seen, kind of fundamental behavior shifts right now that I think will revert or will kind of swing back. And the areas and categories that are most interesting to me are categories where there was already momentum in one direction, and this has just accelerated that momentum, either by bringing down regulatory barriers, bringing down kind of behavioral barriers, and also accelerating the conversations at a higher level across the stakeholders that need to have buy-in in order to see things kind of turn into action. And so an example would be, I think on the retail side, there have been conversations over the past 10 years about what we're going to do with all this empty and vacant, big box retail space. And what we're going to do with parking lots when retail traffic goes down. And I think that this has really accelerated that conversation that zoning laws will have to be loosened and spaces will have to take on more flexible models, and we'll have to kind of introduce alternative use cases into spaces that were previously retail only. And so I think there's, on one hand, one trend that will be interesting is just the flexible use of space and the fact that we kind of need to introduce new modes of engagement into spaces that previously had kind of one singular modality around them. Another category that I think is interesting along those lines is just our dynamic and relationship with small businesses. So, small businesses employ over 50% of workers in the US, but they're the heartbeat of our community. I think we're feeling that more than ever right now as we see many small businesses go away. Some predictions say that 20 to 30% of small businesses that have shuttered their doors in the past month will never open their doors again. And small businesses have historically run, I think, with like 27 days of cash on their balance sheet.
Right.
The relationship that we want to have with small businesses as real estate owners, where we want them to be these kind of cool and dynamic components of our property, will have to shift from an economic standpoint. And I think that we'll start to see really interesting modes with retail where not just percent of rent deals or kind of different ways of collecting rent, but actually like embedding retail incubation into real estate business models, kind of introducing retail as more of a front or transactional layer of office properties, of multifamily properties. I think seeing retail as a component of industrial properties, or maybe wholesale distributors have some sort of like retail footprint as they move closer and closer to urban cores. And I think retail as an asset class will change to be more like retail as kind of a transactional layer to other asset classes. So that's one shift that I think can play out in many different directions, but I think will be interesting in retail. And Jamestown is definitely exploring ways that we can introduce new types of relationships with our merchants and many of these brands that we've also helped incubate. From an office standpoint, I think that the healthy buildings conversation, and applies to multifamily too, but I think especially office, will accelerate, has accelerated. And something that before was just lip service to say that you had a well certification and that you have, good air quality in your buildings will become a necessity. And we will have much more sophisticated tools for measuring and supporting those types of dynamics.
Mm-hmm.
And I think new business lines will be introduced for those that can become experts in deploying healthy building strategies. So I think Jamestown has been looking a lot into that.
How do you define a healthy building?
how do I think that, I mean, there are many that are defining them by various certifications and, you know, kind of structurally defining what a healthy building looks like in terms of air quality, access to natural light, materials, etc. I think just anecdotally, as I think about a healthy building, it's I guess defined as being comfortable in an environment where you have kind of extreme confidence that the building is working for you, and in terms of I guess promoting your productivity and promoting your comfort level. So it's really like a comfort and productivity thing. But I I don't know. I was listening to something the other day that I thought was interesting, where it was talking about how the healthy building conversation really hasn't taken off, despite all the data that points to the fact that we are sitting here in closed environments and losing cognitive function by the hour as air quality worsens over the course of a day in an office space or in a confined space. And it hasn't taken off, even if you know those facts. And I think it's just because it's not really tangible. And the way that maybe natural light is a little bit more tangible and a little bit more quantifiable. And I think that the coronavirus has accelerated the way that we look at air quality and airflow to be actually a tangible and kind of toxic thing.
Yeah.
Where you walk through a space now and you think, who else has come through this space? How quickly is this air circulating? This building feels toxic, or this building feels safe because I have some sort of
So it's almost like a security thing.
Yeah, it's a security thing. So anyway, I think that there's a level of tangibility around it that there wasn't previously, and we can then once it's tangible, you can start to quantify it.
So what's interesting, I think, about LEED and well standards is it more so looked at the, and I guess in my opinion, it more so looked at the quality of the actual building itself. Mm-hmm. And a little bit of what you're speaking to in terms of the healthy building standards is looking at, to me, it seems more consumer focused, customer focused, of like, how is it impacting each individual person, and what is their personal experience with the building? I know Well tried to do a little bit of that, but it seemed like they also were a little bit more focused still on the building.
Yeah. They're focused on how it's constructed, and I think that there will be aspects of that. There might be restrictions to your ability to be proximate to someone else, and having to have some sort of restrictions around like density in a space. But I think until it's a little bit more kind of bottoms up in terms of the tenant or even the employee of the tenant kind of demanding these aspects of health and well-being in their environments, it kind of won't come top down from a real estate perspective. And I think that we're starting to see that happen. And I think especially if we look at the way that big tech companies really took the lead on being the first to work remotely, the first to kind of introduce new security measures into their work environments, I think they'll also take the lead on the healthy building side of things. And as soon as you start to see Google put in place certain requirements around what their office spaces must entail, then you'll start to see landlords, by necessity kind of have to introduce some of those measures in order to attract and retain those tenants.
Yeah. So I guess to back up a step, we've kind of been on the COVID train for a little while. So just want to hear more about just Jamestown's core strategy, and for someone who's unfamiliar with Jamestown as a brand, which I think that's probably a pretty common thing. Most your actual developments are probably more brand worthy in house, have more of a household name than Jamestown itself. Can you just describe what's worked for you all in terms of your strategy with pursuing real estate acquisitions and repurposing? You definitely have a unique approach to real estate. So I think that would be helpful.
Yeah. We've been value add investors in particular for the past 15, 20 years, and have seen the benefits of that. I mean, our strategy has been to buy amazing assets, and so we're really interested in these unique properties that have bones that we think are kind of fundamentally aligned with the aesthetic that we think is kind of going to become more and more in favor. And then we provide a lot of value add in terms of our redevelopment capabilities. And then we try and have a market perspective on investing in neighborhoods and areas that we think we can be almost the kind of defining cornerstone of that neighborhood as it experiences some sort of growth trajectory. So an example would, I think Chelsea Market is just the perfect example, and our most well-known property, but it really describes our strategy to a T. It's investing at the right time in the meatpacking district when that part of New York was still really up and coming. The High Line was being introduced, so walkability was being introduced to the neighborhood. Jamestown, that was absent any crazy data analytics back then, but it was really this sort of forward-thinking approach of follow the artists, follow the creatives, follow the entrepreneurs.
Right.
And we saw that happening in that neighborhood. Buy a property that is interesting and dynamic, so something like the old Nabisco factory, and then apply incredible design and kind of thoughtful redevelopment technique to create a really vibrant community. And then on top of that, kind of program it and continue to introduce merchants and experiences into the property that make it a living and breathing an experiential place. So it's really a placemaking strategy. And then hold it until we think that it's appreciated and valued in a way that is worthy of the amount of effort we put in. And so we sold Chelsea Market a couple of years ago to Google for $2.4 billion. And I think that is a turnaround that really speaks to the times of the office environment, and the mixed use environment has changed such that that these kind of mega tenants or these creative tech tenants want to and need to provide a space for people to work that is compelling enough for them to show up and spend hours in the office when they could alternatively, work from home or have kind of other options. And so that's been our bread and butter, and we've repeated that strategy across several assets. But I think that to the points we've talked about before, it's harder and harder to repeat that playbook in the market that we've had, and I think in the market that we will have going forward, especially given the retail environment. And so we're constantly looking at ways we can apply the secret sauce and this value add real estate approach towards other asset classes and markets.
So I find the placemaking aspect super interesting. I think that seems like a really core kind of ingredient to what you all do. I mean, you can't really you can't time it well and create a true community unless you have a really strong placemaking engine. I'm just curious, like how does technology fit into that? I imagine there's some geographical, like, some GIS, some spatial stuff that can be done to predict like which communities are going to be more receptive, which can experience more traction early on. But yeah, I'm just curious, like what role technology plays in placemaking.
Yeah, I think that you're absolutely right in that sense. My background is actually in product design and product strategy earlier in my career. And I think that the human-centered design approach that you take towards designing a product or designing a business is the same as designing a real estate asset. And prior to some of these technology resources and tools that could provide us with that insight, I think Jamestown was doing that naturally. It was going around neighborhoods, talking to people, interviewing people, conducting town halls, having boots on the ground. Now, as we've grown and have a much larger and more complex portfolio, data has been a really important resource for us just to be able to survey the community and understand what's happening from like a traffic perspective, demographic perspective, to be able to draw analytics over time, be able to compare assets across our portfolio and get kind of a single source of truth. So that's one for sure, is technology at the analytics level and kind of the portfolio management level. I think another is being able to creatively deploy resources. So we as a business have made the decision to have a really robust in-house creative and marketing team. That can be extremely expensive if you don't know how to best deploy those resources towards programming, events, and marketing that is actually driving business and value to the property. And so using technology such as tenant engagement apps or tenant engagement platforms to concentrate our resources that we have in-house in the most effective and kind of thoughtful manner is another way that we use that. Also to maybe automate certain parts of property management so that we can refocus our efforts on the more creative aspects of real estate management has been kind of another part. And then I think there's the baseline, just safety, security, access, efficiency, which we owe to our tenants, we owe to our investors. We as a firm are really bullish on sustainability and resiliency, and I think that we see that as a major wave of both necessity and also innovation over the next 10 years, and have been using technology to try and introduce new and creative ways of kind of driving resiliency at the property level. Uh-oh, Nick, you're on mute.
Sorry.
Okay.
So I had some loud air conditioning in the background. I had to mute. So we have a lot of startups in our community. We work with a lot of startups who are in the prop tech space, and they're very uncertain about how things shake out from here. Hearing you talk and hearing you discuss, your strategy at Jamestown and how you all are thinking about new tech adoption. I think we've kind of heard this across the board from our real estate partners, but to me, it sounds like not only is technology still relevant, but it's actually going to become even more important as we head into the future, right? It just changes a little bit of what the priority is now. Mm-hmm. And kind of, there's a little bit of a short-term focus shift in terms of priorities. But yeah, just curious, if I'm a startup, if I'm a founder in the prop tech space, how do you think about approaching larger partners and developers like you during this time, next 3, 6, 12 months, versus how you would, approach this? How you would have approached you when you were making direct investments and before all this stuff happened?
Yeah, I think that the sales cycle and the nature of the relationship between real estate owner and prop tech startup has definitely changed a lot in the past month and should change. And I think it might actually end up being for better. I think prior to coronavirus, there was a little bit of this just, banging at the door constantly to try and introduce your solution into maybe one property manager, getting your foot in the door, using that to create a proof of concept, and just over time kind of creeping into the ecosystem of a landlord. That sales cycle is brutal, and that's brutal for any startup, and especially if you are trying to be lean and restrictive with your sales expenditures. I think that there are a couple things changing that could bode well for the relationship between startup and real estate owner. One is that I think decisions will have to be portfolio wide as opposed to property specific in a new way over the next year, and hopefully that will continue to last. And what that does is it changes the conversation from trying to get your foot in the door with one property to really coming in at a high level strategic level with a business to say, here's where we see the world headed. Here's how our technology, our service, our business kind of aligns to that. And we think that we can work with you to kind of drive changes at the portfolio level in a way that's necessary over the next couple of years. The other, again, is kind of that compressed timeline. So I think there's a sense of urgency. The flip side of that is that obviously there's compressed budget. And so coming in and saying, we could get a pilot up and running tomorrow because we're a startup and we're lean and scrappy, and you will never be able to build something like this on your own, and you need us, is I think really compelling right now. I think that the challenging piece is, how do you do so in a way that doesn't discount the value of your product and provides you with the compensation that you deserve as a startup, while also being an attractive and kind of getting past the like non-starter point with an owner right now that's in complete triage mode. And so I think that opens up this door to just be collaborative and say, like, we've got the talent, we've got the resources, we've got the technology. You need that. You have the properties and you have the kind of bandwidth. What can we do to bring those together and to find ways to create lifelines over the next couple months? And then what does that look like long term? And maybe it's changing the structure of how you're compensated in the near term in order to have some sort of buy-in over long term. But I do think there's conversations that can be had. I mean, I look at something like co-working, right, which is experiencing a massive hit right now. That doesn't mean that the capabilities and the behaviors that have been built up over the past 10 years in the co-working landscape are just going to go away overnight. Yeah. I think it means that there are just going to be new ways that talent and that technology and kind of that space utilization gets deployed, and the way that the relationship is structured. And so to me, it just feels like it's a lot of kind of come to Jesus moments between real estate owners and startups about what the world looks like and how it can work together.
Right. I mean, I don't know what your perspective on this, but do you think that kind of needed to happen anyway in the real estate space? Like, well, I mean, there was a lot of talk about valuations being frothy, and from an investment perspective, I don't know how you all are looking at current environment versus pre-COVID environment, but I mean, look, if you saw a real estate deal, even if it was a saturated market, it was a pretty hefty valuation, and probably increasing the value for you all as an end user marginally compared to another solution. It seems like people are going to really have to focus on problem solving at this point, which I know and we at Shadow think that's a really great positive benefit from an industry advancement perspective. That should propel us a lot further than just kind of grabbing at a little bit of wealth here and there for a marginal increase in value for real estate owners and developers.
Exactly. I mean, we were talking about this, but it's I'm sure redundant at this point to hear, but some of the most interesting startups over the past decade came out of the recession, and I think that part of that is you're more kind of reticent to adopt technology if you're not feeling the problem at a serious degree. And I think that there's been a lot of kind of technology for the sake of technology over the past couple of years, which was, how do we look into our investors? How do we kind of position ourselves as innovative by having these partnerships and investing in these businesses? Whereas now it's, how do we survive? How do we come out of this thriving? How do we introduce new behaviors and anticipate the dramatic changes in behavior that will surface in the next couple of years? And I think businesses that can come to real estate owners right now while they're scrambling and say, we have some really interesting solutions that can do that. And mind you, regulation is falling around it, and zoning laws are loosening, and there's massive kind of labor pools that are looking for work and are really talented in ways that can be applied toward technology and hospitality. Get that all together, I think you start to have some really interesting businesses.
I mean, isn't that super exciting?
I think so.
I mean, I think that's, I don't know. I mean, situations like this are always, they're always extremely tough. Downturns are tough. Recessions are tough. And I think the one thing I'm grateful for through everything that's happened over the last month and a half is like it seems like there truly are going to be some major improvements to just the way that we live. And I think like the way we live, the way we work is such a core part of real estate. Obviously, I just think like that is something super excited. Like, there's a lot to be afraid of. There's a lot of uncertainty in the space, but like that's something that's actually very exciting, is like real shifts that are going to increase our quality of living and our quality of work. They're on the way, and they're probably shortly on the way. The time horizon for those solutions should be pretty quick.
Yeah, I really hope so. And I think that the biggest question or concern I have is what will the distribution of those changes and improvements look like? And will, if anything, this situation, this pandemic has highlighted the inequality gaps that we have in the US and the inequality gaps that we see across real estate, and in terms of who can live where, who can shop where, who can work where. And so I think that there will be major improvements. I think that I'm hopeful that it will also change the conversation from being these improvements that we're making at a property level need to happen, just for those that can afford to pay for them to happen, and more, these need to happen as kind of a base fundamental right for people to live and occupy these spaces and work in these spaces. And then from there, you can start to introduce kind of new and creative market dynamics.
Yeah, for sure. Okay, cool. Well, we have roughly 15 minutes left, so I want to go ahead and invite everyone on the call to submit any questions that you have. I have a couple more questions for Ginny, but in the meantime, feel free to submit them into the Q&A or the chat, and we'll try to cover them as they come in. So in the meantime, while questions come in, so themes that you're excited about, we've covered a few of these, but technology themes that you're excited about, as something that you think would truly benefit the retail specific environment over the next, I'd say 3 to 5 years.
Retail specific. Yeah. I mean, one thing that I think is really interesting is to think about kind of the convergence of retail and industrial. I talked about this a tiny bit before, but you've started to see it kind of for both ends. You've seen Prologis, who's the largest landlord of one of the largest landlords of industrial space in the country, starting to invest in technology that allows for some kind of like retail management, grocery distribution, things like that. And then on the flip side, you've seen large retail landlords like Related make investments on the industrial side, like investing in Quiet Logistics, which is a trucking fleet for fashion and retail distribution, start to happen. And I think that you'll just continue to see those two spaces converge, and you'll continue to see owners of both retail and industrial real estate start to work together and adopt technologies that can help to kind of reduce the gap between those two assets. And then I think on that note, I think that, last mile delivery has struggled to take off from a technology standpoint, and economics have been very difficult. But if anything, this has highlighted just the massive uptick in online grocery, online delivery, e-commerce in a way that will absolutely slow a little bit, but I think will continue to accelerate. And so to the degree or the extent that real estate owners can start to participate in last mile dynamics in a profitable way, I think will be really interesting. That's one on the retail side. I'm really interested in the convergence of healthcare and medical office and retail as well. I think that telehealth has seen more regulatory barriers come down over the past month than it has over the past 5 years. And I believe that the influx in telehealth will actually increase the number of touch points that we will see among kind of younger demographics actually going in person. Because currently there are very few touch points that millennials and Gen Z have with doctors. And I think this just kind of introduces health management as more of a regular component of everyday life. And that means that there might be more kind of healthcare nodes, clinic models, distribution models within urban environments that can complement the telehealth or digital touch points that people have with their care environments. That's another one.
That's a good one.
Yeah. And then I think F&B will be really interesting too. Like we've been seeing dramatic shifts over the past decade from the degree to which food and beverage and restaurants and entertainment are kind of anchor tenants in retail environments and mall environments. And yet those businesses are just like extremely hard to run and extremely hard to make profitable. And I think that people need to eat. People want to eat. People will still want to eat at restaurants, maybe in like less dense restaurants. But I think that restaurants are going to go away in a slower fashion than traditional retail. And so I think new models of F&B within mixed use environments will have to start forming. I'm sure like ghost kitchens I haven't been very bullish on, I think because economics are hard to make work, but I think some model of kind of commissary kitchen distribution will start to take hold. I think that maybe you'll start to see things like a food hall environment actually becomes the cafeteria environment for the 7 floors of office above it. And there's membership structures in which office tenants kind of help to subsidize or pay for restaurants, and or there's grocery co-located with restaurants, and there's kind of like wholesale distribution coming in a direct-to-consumer channel. And so I'm super interested in the way that our entire kind of like consumer F&B experience will shift after this.
Well, it sounds like we have a few questions here. It looks like we cover a lot of Scott's already. Scott had just maybe more specifically, Scott had a question. How about suburban malls, big box becoming placemaking community in addition to wholesale retail distribution? You were kind of covering that, but that's an interesting angle.
I think it's super interesting. And I think it gets at this fact that just space will have to be repurposed. And those conversations have been happening, but now they're going to happen faster. And I think that the conversation around retail and mall conversion into multifamily and purpose-built multifamily will probably accelerate. And I think that this has also introduced new conversations around kind of reverse urbanization, in which suburbia might become more attractive to millennials that are getting older, are now more cognizant of the nature of space and the nature of privacy. And so that's one is potentially kind of repurposing vacant malls or big box spaces as multifamily. And then I think another purpose-built multifamily environment is senior living, where senior living has been hit extremely hard right now. I think it highlights the need for alternative senior living models that are more tech-enabled, kind of less dependent on these confined spaces that are, operating at like hotels and kind of have more independent living components to them. So you might see some repurposing there. And then I think there is also some really interesting conversations around things like the nature of media and studio spaces and like virtual recording areas and kind of engagement environments. And that's a little bit more far out, but it's not unlikely to see big boxes that might convert into, you see this in China, like, convert into an esports gaming studio or convert into a virtual fitness conglomerate of studios. And then the last category, I guess, could be just healthcare, and that this has highlighted both the need for distributed and kind of proximate healthcare within communities, as well as the need for just better clinic and medical office environments to properly reward the people that are both working there and staying there. And so I think that we might see some interesting introductions in that space.
That's great. Yeah, so Scott Ellison had a question. How does Jamestown think about paying for pilots with startups right now? We covered this a little bit, red light, green light, yellow.
Yeah, I think it's kind of binary. I think that it's really red light if it feels like it's a startup that maybe will help us get somewhere we want to go in 2 years from now, 3 years from now, and we're like, oh, this will be really interesting, but it's not hitting one of the core categories that we're feeling most right now. If it's something that can address a solution that we are currently pouring resources into or are trying to solve, like green light, absolutely. With the caveats of there's just general, you can't open the newspaper without reading about the changing dynamics around startup, layoffs, funding cycles. And I think that whatever you can do as a startup to guarantee some sort of viability that your business will be around, or to introduce some sort of downside protection if you are going to work with a landlord, I think that the better, because no one wants to partner with someone that they think might go away in 6 months. And I know that that's a really challenging conundrum that we're all facing, but I think to be as transparent as possible and to try and introduce a real need, but also, again, kind of get compensated for it and be as well capitalized as you can be is better.
So Collian asked, broadly, a lot of the technology you've discussed from a tech angle around how to improve efficiency of real estate spaces during O&M phase of the building life cycle. Any thoughts on how the tech landscape will change and evolve for the project design to construct phase for real estate projects?
Yeah, there are definitely several ways. One is from a labor safety and kind of labor management perspective. I think this has really highlighted the risk that many people who are on the front line of labor experience in the construction and development side of things. And so sorry, my internet.
Oh, you're good. I thought it was me.
The woes of COVID. Yeah, so I just think during the construction phase, I think just labor management and kind of supply chain management, I think will require more safety, more oversight, more transparency. You could imagine, distributed ledger technology kind of coming in an interesting way to manage your understanding and transparency into supply chain. Yeah. And then from a safety and security and access perspective, I think this just accelerates the need for remote mobile access into properties, into job sites. And then it also, to the point I was making earlier about firms shifting from a property and project by project mindset to a portfolio level mindset, I think that there will be some interesting technologies that go into just transparency across your portfolio and across everything that's happening, as opposed to relying on one construction manager to kind of manage that process. So that's like virtual touring, mid design, in addition to having kind of analytics engines that provide you with real-time updates on the design and development process.
Definitely. Okay, so Michael said, what do you think the outcome will be of all of us learning how to work remotely and therefore maybe being able to downsize office space, increase online shopping compared to the physical shopping experience related to retail? Or will this shift us out of our Netflix, Amazon, Facebook private lifestyles and increase physical touch points? Good question.
Yeah. We're all so desperate to get out of this that everyone just goes bananas and only wants staying out in person. That's definitely a real possibility.
By the way, I think that's totally going to happen. Like everyone's just going to completely let loose as soon as this ends.
Oh yeah.
Which I find that to be pretty fascinating, but yeah, sorry.
Yeah. And I think in that world that there's kind of this like pre-vaccine, post-vaccine reality of, for the next year or so before we have a vaccine and widespread testing, there will be restrictions on in-person touch points. And I think some of the trends that we see around online shopping will, and working from home will just have to be sustained by necessity and by government, regulatory pressure, which your guess is as good as mine when that ends. But I think that long-term, you're right. Like there will be some sort of rebound back to in-person touch points. 90% of retail purchases in Q3 of 2019 were made in person. And I don't think that's going to evaporate overnight. But I do think this has introduced those experiences and those capabilities to kind of the edges of our communities that were less likely to adopt them. So executives across a financial services company that said, we'll never go work from home, now see that flexibility is something that's desired among a young, rising, talented workforce that may say, actually, it's expected now in this world that we have one day a week that we can work remotely and that we kind of have those policies in place, or a senior living environment where they said they would never online shop is now accustomed to online grocery delivery, and that becomes a staple or a partnership with multifamily that enables existing kind of living environments to now flex as these more dynamic spaces. So I think there will be, like, on the margins, kind of faster introduction or faster adoption, but I don't think that it will eradicate in-person touch points.
I like that. I like that take. Okay, and then Scott has one more question. Would you see much of that emerging around transit in the burbs? I think back relating to the first answer of his question around like bigger boxes, suburbia, malls.
Yeah, like transit oriented development. Yeah, I think so. I think that I think we were already starting to see that shift right towards kind of suburban neighborhoods, well located around transit environments, with access into the cities. I think that the ability to work remotely, which might change the equation for someone that says, you know what, actually I'm more likely to move to the suburbs if I can work remotely one day a week, and have the space that now I again recognize to be desirable or more desirable than I thought it to be, might start to accelerate some of those timelines. We also just have aging millennials who are starting to have kids, that I think we're kind of starting to push things in that direction. But yeah, I think that mobility has been something that's changed a ton in the real estate equation, obviously over the past couple of years, and thinking through the role in which you as a landlord kind of have to now incorporate partnerships with new mobility providers, with micro mobility companies, changing structures and leasing structures and kind of dynamics with parking lots will come to the forefront as the way we think about commutes and the frequency with which people are commuting changes. I don't know if that answered that question, but try to talk in some mobility things.
I think that's a great way to wrap up the Q&A.
One technology comment there, sorry, I was just going to say is I think that parking tech is so interesting, and I know there are several parking tech companies that are trying to take the equation from you today as a landlord must decide what to do with this parking lot that might become obsolete over the next 10 years, to actually, none of us really know what mobility is going to look like in 10 years because we've gotten self-driving cars all wrong. We've gotten like, drones wrong. Like we don't actually know what that equation will look like, but we as a technology company can come in and be a new type of operator and a more dynamic operator where we can use analytics to understand those changing dynamics and kind of anticipate partnerships or structures that we can put in place to better utilize space, and do some sort of profit sharing and help make you money off of those kind of densification efforts, and in a way that doesn't put the burden on the landlord. So I think you'll start to see some really interesting mobility partnerships with real estate firms.
Well, super cool. Ginny, thanks so much for coming on. We're out of time. Do you have any final thoughts that you want to share with the group? By the way, this whole thing's been recorded, so we'll distribute audio, we'll distribute video for all of our community members, so y'all can rewatch this or share with other people. But yeah, any additional thoughts?
Not much. Thank you so much to the Shadow team.
Great.
And I think, yeah, and going back to what I was saying about the collaboration, I think this is a really cool time to get super scrappy and creative in ways that real estate and technology can work together. So hopefully you guys can reach out to Nick and the Shadow team if you want to get in touch and talk about ways that Jamestown can work with you.
Awesome. All right. Thanks again.
Much. Stay healthy, everybody. Bye.